The labor market remains healthy. Job gains averaged 172,000 per month. Our baseline outlook is for economic growth to remain solid, labor markets to stay strong, and inflation to move back up over time to the committee's 2% objective. However, uncertainties about the outlook have increased in recent months. In particular, economic momentum appears to have slowed in some major foreign economies, and that weakness could affect the U.S. economy. Moreover, a number of government policy issues have yet to be resolved, including trade developments, the federal debt ceiling, and Brexit. And there is a risk that weak inflation will be even more persistent than we currently anticipate. We are carefully monitoring these developments, and we will continue to assess their implications for the U.S. economic outlook and inflation. Concerns over trade developments. Growth. In our June meeting, we indicated that in light of increased uncertainties about the economic outlook and muted inflation pressures, we would closely monitor the implications of incoming information for the economic outlook and would act as appropriate to sustain the expansion. Many FOMC participants saw that the case for a somewhat more accommodative monetary policy had strengthened. Since then, based on incoming data and other developments, it appears that uncertainties around trade tensions and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook.
Not a lot of pressure from your testimony and what we observed. Is there a new paradigm out there as far as evaluating this today, and is it because of the global economy, or what is it? Because we have low unemployment, but we have, at the moment, not a lot of pressure from your testimony and what we observe on inflation.
So the relationship between slack in the economy, or unemployment, and inflation was a strong one 50 years ago. If you remember that in the 60s, there was a close correlation there, and that has gone away, and it's really been
But we had a different economy then, did we not?
Very different economy in so many ways. And in this way, that really, I would say that period, at least 20 years ago, that period was over, and the relationship between unemployment and inflation became weak. It's become weaker and weaker and weaker. In addition to that, I think we're learning that interest rates, that the neutral interest rate is lower than we had thought. And I think we're learning that the natural rate of unemployment is lower than we thought. So monetary policy hasn't been as accommodative as we had thought. So I think we're learning all of those things. At the end of the day, there has to be a connection, because low unemployment will drive wages up, and ultimately higher wages will drive inflation, but we haven't reached that point. And in any case, that connection between the two is quite small these days.
Chairman Powell, thank you for your service. Thank you for your work to keep the Federal Reserve independent of both parties and do your job for what it was set up to be. We salute you for that. Several things you touched on